Ladies and gentlemen, welcome back to the channel. Donald Trump is giving a speech right now. It's actually just about ended in Warren, Michigan. That is my home state. I am recording this video not too far away from there, in fact. And, well, it's a bit of a mixed bag. Some good sounding things, some not so good sounding headlines. I will share them with you in this video, what I think this means for markets. I was hopefully optimistic that we would get a pause on China tariffs. Thinking back at that this is probably not the best place to do so, considering a lot of people in Detroit, Michigan are kind of pissed off from all of the outsourcing of manufacturing over the last 50 years that has essentially destroyed the city. Maybe announcing a pause on China tariffs in that city in particular is probably not the best approach to take. Nonetheless, I do think it's coming, and I think some of these headlines highlight just that. So let's go ahead and get into it. Hit the like button and subscribe to the channel if you have not done so already. Ladies and gentlemen, let's get started. Donald Trump says, first and foremost, we are going to make a deal with China. That sounds good, but I think Wall Street is really waiting for the headline that tariffs are paused on China for 30, 60, or 90 days. That is what is going to move markets. We've already heard there's going to be a deal with China. We have to start negotiating. Something has to happen to actually get a deal done with China. And unfortunately, from this speech, it doesn't look or sound like anything has materially changed. Donald Trump is praising investments from Nvidia, TSMC, and Amazon. Donald Trump says that Main Street is preferred versus Wall Street. So kind of one of those negative sounding headlines, like he doesn't really care about what Wall Street thinks. If Main Street's going to benefit, which they won't under the current tariff administration, let's be clear, then screw what Wall Street thinks. But unfortunately, Wall Street and Main Street are way too interconnected to have a stock market crash, to have firings and layoffs and lack of investing to, happen. And then for that not to affect Main Street, sounds good when you say it to a crowd of Main Street folks that you don't care about Wall Street. But the reality is you have to care about Wall Street to care about Main Street. Donald Trump says that Apple is a great company. Here's another negative sounding headline. Donald Trump says that tariffs have not started yet. So, yeah. Yikes. Well, Jolt's job openings plummeted 300,000 this morning. Yeah. He says you haven't even seen the start yet. Donald Trump says that China seeks a deal and we seek a deal. That's one of the better sounding headlines. Donald Trump says we cooperate with China. And again, he says we are going to make a fair deal with China on trade. Donald Trump says that Canada and Mexico have taken significant amounts of business from American companies, specifically referencing automakers, which is definitely true. Donald Trump says that China tariffs will end job thefts, which, again, is one of those things that sounds good to a crowd of working folks, but in reality, it's capitalism. Donald Trump says that trade negotiations, should they prolong, will simply establish price, which doesn't make a whole lot of sense to me, considering we're gonna have shelves in grocery stores that are maybe not grocery stores, like a Walmart, like product wise, that are gonna start running dry here in the next couple of weeks via this embargo on trade with China. You're gonna see an inflation problem. You're gonna see a recession problem. It's not gonna benefit Main Street. This is the core reason why I believe Donald Trump maybe doesn't want to delay tariffs on China, but he has to. He has no other choice but to delay tariffs on China. You cannot, as an American economy that relies on a lot of trade with China, shut that down overnight. It is simply impossible to do without a depression and or hyperinflation. It is mathematically impossible. Let me repeat that. Impossible to shut down trade with China overnight to one, not have a depression, not a recession, a depression and or hyperinflation. In 5 to 6 weeks, there could be half of the amount of products on shelves. That is significant. It was reported today that you're seeing a plunge of 40 to 60% in orders for Chinese products, for port activity in China. And the head of the port of LA said that they expect 40 to 60% reductions of traffic volumes from China in the next couple of weeks. Like, simply put, Trump has no choice. Question is, when does that happen? Do they push this right to the brink of disaster? Or do they use common sense and don't do that? That's the question at this point. Now, Donald Trump says that India, France, and China officials want to make a deal. Donald Trump says the Federal Reserve have kept interest rates steady. And he says that he has no criticism of Federal Reserve Chair. He says that he wants to be courteous and considerate to the Federal Reserve. But he says that he knows more than the Federal Reserve Chair. And he says that the Fed's officials are not performing well. He says that nothing will impede my mission to ensure the safety of America. Going on to say that prices increase is fake news misleading readers. I hope this is just like a huge bluff. If you don't laugh from this, you don't understand economics, okay? Because in 5 to 6 weeks, maximum, you're probably going to see the effects of this just within 2.5, 3.5 weeks or so. You are going to have prices that go up. Not necessarily because of, let's call it the tariff, but because you're not going to have shit on shelves, okay? Imagine this. This water bottle. It's worth like 40 cents. Call it that. Maybe less than that. What if this was the last water bottle on Earth? Maybe that's a little dramatic. But what if there were half the amount of water bottles in the grocery store? Maybe this thing's worth like $1 or $2. Maybe $5 or $10, right? How much is water worth to you? Extreme example, I get it. But it's for any product. It's supply demand. If there is demand that far exceeds supply, you have inflation, okay? No matter what's going on in the economy. Or you have a scenario where there's so many people losing their jobs that they simply cannot buy things, and then you just risk an economic collapse, which would be a depression. Like, there's no getting out of this. There's no choice here, okay? Donald Trump does go on to say that politicians destroyed Detroit to develop Beijing. Donald Trump says we would like low interest rates, says the world is undergoing common sense revolution. And Donald Trump says we are ending inflation. Like, seriously, I hope Trump, and I'm a Trump supporter. I voted for Trump. I think he has the best intentions. I don't know if he's just ignorant to the situation, though. Like maybe he's so disconnected from reality that he doesn't understand that if there is 30, even 10%, 20% less products on shelves, you will see hyperinflation. Or maybe a 2022 level of inflation. You get to like 30, 40, 50% of shelf capacity that is unused, that is not there anymore. You're going to have hyperinflation. There's nothing the Fed can do about that. Like, the Fed should be cutting rates right now. I agree. There's nothing the Fed can do about that kind of hyperinflation. I just hope this is oh my gosh, for society, not like something that he actually believes in. Donald Trump says that Elon Musk is a great guy and has really helped us. Trump says that Elon produces excellent vehicles, but not everyone desires one. Speaking about specifically EVs, again, he is in Detroit, so that's not super surprising. Now, futures at the time of recording this video, the S&P are down about 0.26%, so they're taking this as really we're not getting too much new information. And I think Wall Street is really looking at this and saying, like, Trump, dude, you have no choice. You're going to have to cancel this trade war with China. There is literally no other way around it. And I know I come off as like bearish with the last couple of minutes of commentary here, but let's be honest. Like, there's no way that Trump is going to let this happen. There's no way he's going to let hyperinflation happen. There's no way he's going to let a depression happen. Okay? That's like 97% of my mental capacity believes that. 3% thinks maybe he's just ignorant to reality. There's that risk, okay? That he doesn't understand economics. He doesn't understand what, like, taking away like stores products is going to do for inflation or for the economy. There is always that risk, okay? Something we have to acknowledge. But like the vast majority of my mental capacity believes you have to end the trade war. You have to pause the tariffs very soon, within a week or two, before you start really getting irreversible damage. And I think that's why you see some of these headlines, and I'm not the only one that's like, this is effing crazy. But Wall Street already knows that you can't let this happen. It's like that 3% risk is not large enough to cause material downside at this point, right? Now, a week and a half, 2 weeks from now, markets are going to start really selling off if there's no pause on China tariffs, or there's no negotiations, or some kind of serious progress. Like, that will happen if there's no progress. Does that make sense? Let me know down below in the comment section if this makes sense to you, or if it's just going over your head. Donald Trump says that Elon Musk has paid a big price to assist with cutting federal spending. And yeah, I mean, Tesla was down like almost 60% from all-time highs within 2 months. It was the fastest sell-off in Tesla's history. Like, yeah, he's paid a big price, and so has everyone else that invested in Tesla, and 401ks for that matter. So again, in conclusion of this segment of the video, I mean, it was a lot of the same old, same old. I'm still under the assumption, and especially from a lot of the positive China headlines from the speech, that we're going to get a pause on Chinese tariffs coming very, very soon. Now, we still have big economic data coming tomorrow morning. You have the GDP growth rate, quarter over quarter advanced data for Q1. You're expecting a positive number. The Atlanta Fed GDP now tracker is negative 3%. There's still inputs, though, that go into Q1 GDP after tomorrow's GDP report. Even later on in the day, you get personal income, personal spending, and PCE, in which all of those feed into the GDP report. So tomorrow morning is going to be massive. And then in after hours, you're going to have Microsoft. You're going to have Facebook earnings. And then Thursday, you're going to have Google and Amazon earnings. And then by Friday, you're going to have the jobs report. Okay? Unemployment rate. Like, there's going to be a lot of volatility here in the next couple of days. And I still believe at any moment you're going to get a pause on China tariffs. Perhaps doing that on a stage in the Detroit area is probably not the best arena to do that. I think even tonight, though, you could see a pause on China tariffs. That is in the cards. Maybe not tonight. Maybe tomorrow morning, or hopefully the next couple of days. And I think that's really what Wall Street is gearing up for right now, especially, again, considering we did have a close, and even still here in after hours, you're about 75 cents above your 300-day moving average. The next target's 559, that's the 50-day moving average, and really your 200-day moving average at 570. That would represent upside from here of about 3%. I think a pause on China tariffs would at least give you that. if not a move to the 100-day moving average at 577, which would be upside of about 4.25% from here. So again, some good, some bad out of this speech, but doesn't change my whole conviction of what's coming next. And that's a pause on China tariffs. But then again, you got to keep in mind there's that 3% or so chance of my mental capacity that says maybe Trump is just ignorant to reality, doesn't understand how economics works, and maybe nobody in his inner circle is advising him well about the outcomes of a trade embargo with China. Like, there's the chance of that, but it's so minuscule. Like, even the markets are not pricing that in. So if you think that Trump is really that far gone that he would let the economy go into hyperinflation and or a depression, like, you should buy some puts on the markets, big guy. Like, you're going to make out very well. If not, a pause on China tariffs is coming at some point soon. And, well, you could see how the markets are favoring that outcome with, what, 6 days now of being green on the S&P. So let me know what you guys think down below in the comment section. Again, keep in mind there is going to be very important economic data coming out tomorrow morning. Again, I'm a little nervous for the GDP print for tomorrow because you're expecting 0.4% positive for Q1, whereas the Atlanta Fed GDP Now tracker, again, is negative 2.7%. But there is other inputs like PCE that comes out tomorrow morning. By the way, you're expecting virtually no inflation, 0.1%. This data is for March. Personal income for March is expected at 0.4%. Last I checked, March is a part of Q1. Personal spending, which is 73% of the economy, is expected to come in at 0.6%. So the fact that we get Q1 GDP like before you get personal spending for March really means like personal spending is probably going to be an even bigger catalyst, you know, come to think of it. How do, like, if personal spending's really bad, then people are going to say, oh yeah, you know, GDP, even if it did come in positive, is going to be negative, okay? If it comes in negative, but personal spending's really good, people are going to say, well, GDP in the second revision's going to be positive, right? Or the odds of that are much higher. So tomorrow morning's going to be a little weird. I'm just going to say that. And what I can tell you, it's going to be very volatile heading into earnings in after hours, which is also going to be incredibly volatile. Welcome to volatility. That is 2025 in a nutshell. Microsoft Meta reports earnings in after hours. That's over $4 trillion alone of market cap value. Like, you're going to move the markets, even though Microsoft and Meta are like not super tariff companies or consumer related companies to a certain extent. That's going to be Amazon and Apple. Those are the big ones for this earnings season. That's going to be Thursday in after hours. Microsoft and Meta will still move the markets just based on the weighting in the S&P. So keep all of this in mind. Ladies and gentlemen, with that said, have a fantastic rest of your day and your nights. Let me know what you think is coming next down below in the comment section for markets. Are you bullish? Are you bearish? Are you positioned for upside? Are you buying, you know, puts for the downside? Let me know what you guys are doing down below in the comment section. Have a great rest of your day, and I will see you in the next one.